that I'm about to show you. So when we enter a trade, we will usually base our take profits in areas we know that realistically the majority of the other traders in the market are going to have. So this is usually why you will see a reaction around lows and highs. So for those in our community, the free confluence strategy, we would enter on the retest of the previous high, and our full take profit would obviously be at the new high which was made, because we're assuming that if price was to double top for a reversal, for example, we would still hit take profit in that trade. Okay, so you're just saying that price is going to retest the previous structure and potentially all the buyers are going to get out, or not all, a majority of the buyers are going to get out, which is going to cause price to pull back. So with this strategy, we're actually going to turn this whole idea on its head. So what we are doing, we are actually going to enter the trade where we believe other people are going to be closing their trade. Because what you will tend to find is where the majority of people have their take profits, you will see price react. And that's usually where you will get the quickest and the best reactions. So why trade with the majority of people with the same targets when you can do the opposite and try predict when people are getting out of trades? So let's say, for example, the market is pushing up, price is in a nice little uptrend, and you see a certain level you're interested in regarding where you would probably target if you were long. Now, instead of getting in a trade and targeting that area long, why not go short on the area that people are going to take profit? And you're going to understand more with the next few slides why we are going to do that. So what are the main points with this strategy? The time frame is the daily. So the main thing we are looking at in this is the daily and obviously the 4 hour. The confluences we are going to be using are previous highs and lows coupled with psychological numbers. And it's not just as simple as that, guys. There is some more which goes into it. In terms of the stop loss, instead of you needing to make a decision, the stop loss is going to be the same for every single trade. And then the take profit is only going to be based on the 4 hour time frame, which obviously you will understand in the future. So we know what the time frame is. We know the confluences we are going to use. We are going to find out what the stop loss is. And obviously we have a take profit. So in terms of entering a trade and knowing what we're targeting, we pretty much have everything right here. So let's have a look. And this is going to be quite interactive, guys, in the terms of I am not going to answer questions for you. I am not going to go to the next slide unless you guys in the chat answer the question. So let's say, for example, someone is going long from here. So don't worry about the reason for entry. This is just a random idea. Someone is buying from this level here. Realistically, guys, where are people who are going long here going to target on the way up to, for example, this top high? And the clue here is market structure. So guys, in the chat now, if you were going long from this place here, realistically, where are you going to target? What are some targets? And I'll wait for you guys to put this into the chat. There's no, well, there is a right and wrong answer, but just put into the chat what you think. So Karana said lower high on the left. Tabish has said previous high. RT, previous high. Darius, yes. J, highs. Taco, previous high. John, highs to the left. Lars has kindly drawn a line as well. Jordan, first blue candle going up. Dale Reeves on the trend line. So I like that answer, but we are not using trend lines. As mentioned at the start of as mentioned at the start of this call, let me just go back here. The only thing we are looking for in terms of confluence, guys, is the previous highs and lows coupled with psychological numbers. So Carla, this is actually a good person to ask because I know you do like the higher time frames and you are a swing trader. So you're saying you would target the highest point, but move my stop loss to the last high. Great. So let's say, for example, Carla, you are targeting this high here. If you was to take partials, and I'm not saying you do, but let's say you were saying you wanted to take partials on the way to this top level here, where are you going to take your partials?
Oh, that would be for sure the last high, obviously. Is that where people would take partials?
Perfect. So every single person pretty much in the chat has said that if they were going long from this position, realistically, they are going to be targeting these highs here on the way to that. So if you're going long, you're going to target lower highs. Now, Jordy, I liked what you said in terms of the first blue candle going up, and that is going to come into play in the following slides. But in terms of this, we are not looking for the break and retest. So all we are doing, as everyone said in here, everyone is going to be looking to target the highs, we hope. So I've drawn lines here. All these are lower highs within the market. Okay, so I've asked what are these? I've just answered it for you. You're welcome. So this is the same chart, but with a sell bias. So a trader entering the market from this level here, realistically, where do you think people are going to target who are going short? So you can put that in the chat now. So Tabisha said low below the double bottom. Anyone else, guys? Where would you target realistically? Chris, previous lows. RT, first bearish candle on the left. John, structure to the left. And again, guys, the clue here is market structure. So we're always going for market structure. So as mentioned, when we did the free confluence strategy, we said that what would happen is that when price reaches, for example, when you're selling, when price reaches a low, we are looking to see that price will react again when it retests that level. Because if you think, guys, price is coming down here, where's a point price could react? As a few people have said, double bottom here. Well, they could also be, if we go to the next slide, these lows here. And you will notice, guys, realistically, someone who's short with a big target, they would target the very low because they're saying, well, if price is here, like Carla mentioned, if she was long, she might have a target for this high here. In terms of the sell, people might have a final target there. But if that is where price has reacted and you're assuming that price is going to react there again, these are obviously here just duplicates of this. It's just not the very low in the market. So these are the areas that I would say realistically traders are going to be trading. And guys, please, I know we've done the free confluence strategy. Please forget about break and retest. In this strategy here, we are not interested in the break and the retest. And I will say as well, guys, I should have probably said this at the start. This strategy here and what I'm about to show you has been tested. It works. So please, guys, when you get added to the community, I don't want to hear anybody talking about, for example, the 1 hour time frame, the 30-minute time frame. What you are about to see here, guys, is the strategy. No changes. I don't mind what you think will work. You can test that, obviously, behind closed doors. The strategy that I'm about to present to you has been tested. It works. And I would appreciate it, guys, if you would just look at it and say, you know what, I will take it for what it is, and I will trade this moving forward.
The same as the one I mentioned earlier. Ignore everything else just for the testing. Stick to whatever Sam says and just follow it like a Bible. Yeah,
and the same for Tom's strategy, guys. So, as mentioned, if Tom has shown you that the lowest time frame that he is interested in the previous call, why are you going to go into the 1 minute? Why are you going to go into the 5 minute? Because he's told you what has worked for him, and his results are a reflection of the strategy he's taught you. So why are you going to start going into the 5 minute and the 1 minute? because that is the biggest thing why traders fail, in my opinion, because I have been guilty of this in the past as well. I will find a strategy, it works, but I think, how can I make it better? How can I refine this to get better risk to reward? Usually that ends up with losing trades and not making money. If you'd have just stuck to the strategy that you learned in the first place, you would be in a better position. Okay? So that's what I want to say in terms of that. So guys, next slide, same chart once again. Where else might someone have their take profits on this chart? And the clue right here, guys, the previous clue was market structure. The clue here is prices. So where potentially could people have their take profits? And I just want to say, guys, please bear in mind, there is multiple answers. So it's not just one answer. In this chart, we are assuming that you are, for example, targeting this high. On the way to this high here, where might you have TPs? So to be fair, guys, every answer in this chat right now is correct in some way, shape or form. So RT has got the perfect answer, and so has Bakul and Darius, who has just mentioned that. And again, Jordi, every number on the right, round numbers, psychological levels, RT, 00 levels and 50 levels. Perfect. So what people potentially are going to look at is these psychological numbers on the right-hand side. And we're going to go into why they work in a few slides, but that is correct. So if we just go to the next slide, these are the psychological numbers on the side. So what I want to say to you guys is, why do you think people would target these levels right here? And again, guys, don't be scared of getting the answer wrong. Everyone's here to learn. Why do you think people would target these levels here? So Darius has said the easier. Jay said important numbers to the banks. Carlos said round and nice. Jordi has said...
Sounds like my Tinder profile.
Jordi has said human nature. That answer there right now is my favorite. Dale, floor traders are not going to be shouting decimal points. Perfect.
That's
RT,
a strong
banks have orders on the level. Perfect. Because they're used for the banks. Exactly, guys. So once again, this is a selling. Let's say you're selling here. Once again, where may people have their TPs? And let's have a look. We've just answered it, so I'm not going to ask you again. Potentially, people are going to target these round numbers that are below price. Okay? So let's go over this. We've just had the answers here in terms of why we think round numbers work. And let's see. So why do round numbers work, guys? Human psych. So going back onto what, who said human nature? I'm just looking at Jordi. So going back to what you said, exactly. Human nature. Easier to understand. Institutional targets. A lot of people's take profits and entries. And a round number will happen, guys, every 50 pips across all pairs. So this doesn't change based on the pairs. So a round number will happen every 50 pips with a 50 or a 00 ending. And guys, in the future, a spreadsheet will be provided in this community with a spreadsheet for every round number for every pair. Okay. So I'll just pause for a second here, guys. Based on everything I've just gone over, and like I say, we're only 12 slides. Is there any questions at this moment in time? You can unmute yourself, put it in the chat, whatever you're comfortable with. Are there any questions to why somebody would target a previous high or low and also the psychological numbers? Any question at all? So RT said no, Dale said no. So what I'm going to do, guys, I'm going to assume that everyone's happy. Okay? So let's go on to there. So RT said straightforward info. Darius has said it's so simple it might just work. Exactly that, Darius. So round number examples, guys. Australian dollar, US dollar, 0.73, 0.7350, 0.74. CAD yen, 86, 86.50, 87, 87.5. Euro CAD, 149, 149.50. You get the drift, guys. Look at the screen. you can see that all these numbers here go up in 50 pip intervals. Okay, easy as that. So now we're going to look at why, for example, do we think that the I can't even speak, institutions potentially use these levels. So what I'm going to get up on the screen now, guys, is an example of a Goldman Sachs forecast for Euro USD. So back in April, Goldman Sachs forecasted Euro USD to reach 127 over the following 6 months, which is a higher estimate compared to the earlier forecast. The upgraded forecast came after the dollar reached its lowest point since the beginning of March. Goldman Sachs continues to recommend that investors go long on the euro. The company increased its targets from 125 from a previous forecast of 121 for the end of the third quarter. Goldman Sachs still holds a 12-month forecast of 128. What do you notice, guys, on this screen here? What do you notice? So yeah, Chris said earlier 2 decimals, whole numbers, 0 levels. Dale, whole numbers. Exactly. So you've got to think, guys, how much money are the banks trading with in this market? Billions and billions of dollars. And we know, guys, that the institutions move the market. So because of that, for example, here, they're forecasting Euro USD to reach 127. Okay, for example. What do you think is going to happen, guys, when Goldman Sachs long trade reaches 127? So in the chat, guys, what do you think is going to happen once the TP is hit for Goldman Sachs? It'll melt, price drops, price will drop, sell. Exactly. So you think that at the end of the day, guys, let's say, for example, and this is not realistic, I'm just making this up. Let's say they had, I don't know, $1 billion long on the euro. And what they would do is once it reached 127, they have closed that trade. That then means $1 billion has just been withdrawn from the buyers. Because you've got to think, guys, the market is buyers against sellers. If there's more volume buying, price is going to go up. If there's more volume selling than buying, price is going to go down. So let's say, for example, a few banks have a target of 127. Then you've got billions and billions of dollars being drawn out of the market once price reaches this 127. So looking at this, guys, we could expect a reaction. So now I want to ask you, based on the previous slides, what do you think, guys, that this strategy is going to be made up of? What do you think? So Darius, highs and round numbers. Anyone else? Psychological numbers. Perfect. So we're just looking at low and round numbers. Exactly. So at the end of the day, guys, the 2 points that I have just made is where would people target if they are long? They would target the previous highs. Where are people going to target if they're short? The previous lows. What potentially as well are people going to target? Round numbers. Like we've just seen there, Goldman Sachs had a long prediction of 127. Therefore meaning that at the end of the day, we have people who are taking profit at the high and also people that are taking profit at the round numbers. And hopefully, guys, me saying that has just had a light bulb moment in your head and you understand what I'm talking about. So let's start going into the rules of this strategy. Everyone knows I like a rule-based strategy. It takes the decision-making away from me and I just look at my rules, and if they're met, I take the trade and it takes the stress away. So rule number 1, what we are going to do, we are looking to mark our untested highs within the market. So if we go back to, for example, this example, we would see where are the untested highs within the market. And what we will do, let me go here, we are going to get a horizontal ray. So that's the tool on TradingView. There's a screenshot of it here. We're not using a horizontal line because you will understand why pretty much in this next example. So what I would advise you do, guys, and you can do this, let's say you've got a couple of screens at the minute, maybe do this. What I want you to do is go to any pair on the daily time frame and start drawing a horizontal ray at the very top point of any untested highs or lows. So at this moment in time, guys, all we are worried about and all I want you to focus on is the highs and lows within the market. Forget the round numbers for a minute. So let's say, for example, you would have done, I think this example here is Euro CAD. If you would have gone to Euro CAD right now, these, in my opinion, are the untested highs within the market. You see, guys, this here, this was a lower high on the daily. It's already been retested, and you can see what happened once it was retested. If you also look to the right, what do you see? But we'll get into that in a bit. At this point now, guys, while I've got this screenshot up, is there any questions that people have? Any at all? And you know that I'm going to go into entries and stuff like that in the future, so please don't ask what do we do like in terms of that. Based on what I've gone over, is there any questions? And I think that's a no, so perfect. So this is, for example, your sell bias on Euro CAD. Start at the high within the market, draw a horizontal ray on the highest point of that high. Because at the end of the day, guys, people aren't going to be targeting the body of the candle, they're going to be targeting the high. So there you see, we've got a horizontal ray here. A low was made, pull back, and a drop. This then is a lower high. Come back down, pull back, this lower high has been untested. Pull down, drop, lower high, horizontal ray. Pull down, down, pull back, lower high. And you see here, guys, this lower high has already been retested, and this lower high has already been retested, so we are not interested in that. So the next lower high in this is right here, so we will draw a horizontal ray on there, and then this here is a lower high, but it's already been retested. So at this moment in time, guys, these are our areas of interest on the daily time frame. So let's then look at another sell example here. I think this is, I don't want to make it up, but I'm sure this is a Swiss franc pair potentially. That what we do, if we're looking for sells to start with, we are going from the very top point. We're drawing a horizontal ray on this high. Next lower high is here, but it's already been retested. Next lower high here, this has already been retested, so now we can go to this one here, because all we are interested in, guys, is the untested levels within the market. So you can see here, this is now an area of interest. Price pulled down, pulled back, and this is now an area of interest. I would say potentially now as well, guys, this here made a new low, you could say. So that's an area of interest. Then a lower high was made here, but that has always been, it's already been retested. So Bakul said, does turning your chart to line chart help if you are looking to be a little conservative with your target? No, it's not, because when you use a line chart, wicks are not shown. A line chart only shows candle bodies. So because of that, why we are not interested in the bodies of the candles. We are looking at, obviously, the wick. So like Lars said there, the line chart is the average price. We are only interested in the candlesticks. Please do not start looking at the line chart, because the strategy does not work like that. So just something for the future. So you see here, guys, this was a lower high, but it was already retested, so we're not interested in that. Their price dropped, pulled back, and created a lower high here. So we'll draw a horizontal line because it's not been retested. Price pulled down again and pulled back, and again created a new lower high within the market. So we're happy to draw that. A new low was made, pull back, and once again, a horizontal line was put on the lower high within this market. So these are all areas of interest, yeah? Going into some buy examples. We're just looking at the market moving up here. We start at the lowest point on our chart, and we see this level as being untested, so we will draw a horizontal line. Price came up, created a higher low, but it's already been retested, so we are not interested in this. You see this here, this was now a higher low as well from this point here. So this is a new low within the market, and there you see it's not been retested. Same for this one here. pull back, a new higher low. There you go, line. You see all these here have been retested anyway, so we are not interested in this right here. And you can see, guys, as well, this high here, or the low, sorry, has already been retested. Pull up, pull back. This one has not been retested. Another higher low not been retested. That one has been retested. And then we have this here, which has not been retested. Therefore, we class that as an area of interest. Right now, guys, based on what I've just gone over, does everybody understand that we are marking, for example, the lower highs, higher lows within the market that have not been retested? Please put in the chat, guys, do you understand this concept? So could you now go on TradingView, for example, and draw these lines? And everybody has said yes, so that's perfect. So let's just go on to one last example. See here, guys, I've drawn a couple of red lines here. I've already gone over the retest rule. So that low there was already retested, and you see they were a bounce. This is a higher low, not retested. Pull back, they were retested. No retest. No retest. Higher low, no retest. Higher low, no retest. Come up here, no retest. And you get the gist, guys. There's just no retest. This point here, you see price pull down like so. Push back up, and you're saying this has already been retested. So that means it is a no-go. If a low has already been retested, you could call it a double bottom, a double top, a triple. I don't care what you call it. It's been retested, so it is invalid. Then again here, this is a higher low in the market. It's not been retested, so we are good to go. Now you have all your levels drawn on your chart with the higher lows or lower highs, whatever you've decided to do. Let's look what rule number 2 is. So rule number 2 now is to filter out the highs and the lows with our round number approach. So I've refined this rule so that you can't go wrong when choosing what's a valid high or a valid low. So hopefully that helps you. So when you draw your horizontal ray, there will be a price on the right-hand side where your horizontal ray is, right? So you should all do that now. If you're on TradingView and you're doing this along with me, if you've noticed that you've drawn that there should be a price on the right-hand side. So we need to ensure that this price of the high or the low is within 10 pips of a round number. So for example, this here is at 1.5194. So add 6 pips to that, you have 1.52, which is a round number. So because this is within 10 pips of a round number, you are going to keep this line on your chart. If your line, for example, if I go back, 1 minute, guys, if I go back here, for example, let's say, I don't know, let's target just this low here. If we look what price this low is at, it's at 1.7579. So that is 21 pips away from a round number, okay? So because it's 25 pips away from the round number, you can remove this line. This next one here is at 1.7688. That's within 12 pips, so we remove that as well. So what I want you to do, guys, is use the process of elimination so that you are only left with the higher lows and the lower highs, which are within 10 pips of a round number. And what I just want to add as well, guys, I've told Darius and Jay this story. My uncle is quite high up in the bank in the centre of London. In the past, when I told him I was a trader, he kind of it was like, you're not going to make money, but he was just like, he understands that most people lose within the market. Last week, I'm sure a few of you know, I was on holiday. I was down in Cornwall at his holiday home, and I mentioned the approach that is this that you're going through now. And he turned around and said to me, this makes sense. It makes sense why you're doing that. And that was enough for me to be like, well, if he's saying that, then yeah, it does make sense. Because before, when I told him strategies I were trading, he was like, you're more with the retail, whereas he understood exactly why this was a strategy. So now what we're going to do, guys, tip for Chris has just said, if you hover your mouse over the candle on TV, at the top, it will give you the exact highs and lows. Exactly. So you don't even need, once you're experienced, to draw all these lines. Once you hover over this low here, your cursor will have a price. So you don't need to draw all these lines, just hover and say, is this high or low within 10 pips of a high or a low? Yes, no, sorry, a round number. If the answer is yes, you draw a line. If the answer is no, you don't. Easy as that. So yeah, what we'll do now, we will go over the last 4 charts I showed you with all the horizontal lines on the highs and lows, and we will filter out which we would keep. So this was the first sell bias example here. On the left was the original chart we had. So these were all the lower highs in this move. And you can see, guys, what we've done, we have filtered out the trades here, which are within 10 pips of a round number. So you see we've got 1.5194, so 6 pips off the round number, 1.5440, 10 pip, well, 9.2 pips off the round number, and 1.55956, which is 4.4 pips off the round number. So these now are the only valid highs, because we need the high / low to line up with a round number. If it doesn't, then the trade is invalid, and we are not then using that as an area of interest. Okay? So we can see that is an example here. At this point, guys, does anybody have any questions regarding what I have just gone over? Or do I wait a couple of minutes, guys? But yeah, is there anyone in the chat? Please say yes or no, just so I know that I'm doing that. So everyone said no, no. Carla, I like. Good, good, good. Perfect. Right. Perfect. So we know that this now is the example here. If we then go into a previous, the other previous sell example here. Hold on a minute. I've just gone. How long do you keep on taking sell trades on this chart? Well, Tabish, all we do, as long as a lower high is made and it's untested, the trade is valid. So, for example, in this situation here, this is the last lower high in this formation that is untested. So there's no point drawing a line here because you can see this was already retested. So now let's say, for example, this drops and this becomes a lower high. You could then maybe draw a line there. But you are just looking, what untested levels do I have that is above price to look for sells? And what examples do I have below price that are untested for buys? So Tabish, does that make sense, what I've just said? Yep, so Dale, this is all on the daily time frame. So please, guys, if you are doing this alongside me now on the on TradingView, please note this is all on the daily time frame so far, okay? So you can come in on a Sunday night, for example, draw all your daily levels, and then we'll go on to the next steps. So let's just look at another sell bias example. And I'm sure, have I just gone? We'll go over this. So these are untested lower highs within the market. You see, untested, untested, untested. That was tested, untested, untested. And again, pull back, new low. This was untested. So then if we just look at the prices on the right-hand side that price is currently at, and we filter them out to be within 10 pips of a round number, and look on the right, you can see this top one here is within 8.9 pips. This one here is within 8.5. This one here is within 4.1. This one here is within 2.2. And this one here is within 3.6. So they are then valid. Going on to the daily, going on to the buy examples, you see these are all the untested lows within the market. If we go to the right-hand side and filter out which are within 10 pips of a round number, on this chart here, we only have one example in the market that is at a round number. Therefore, this is your only area of interest on this whole daily chart. That's it. Okay? Let's look at the buy example 2, and then we'll go on to getting into some trades, and let's see what we can do. So You can see here, guys, they were already retested, the red ones, so we are not interested in them. Let's filter out and see what green lines here are within 10 pips of a round number. So you can see there is only 3 lines on this chart out of a possible 8. So there were 8 areas of interest, but only 3 are valid. So this is when you can start filtering out the trades, guys. And then although you've got loads of lines, once you've filtered out the round numbers, you will only have a few. Okay, so perfect. So that is the examples there for filtering out the round numbers for obviously the highs. So guys, in the chat, based on what I've gone through, do you understand how to filter out these daily highs and lows based on that it's untested and the round numbers? So RT, it's clear. Jay, yes. Dale, yes. Basically everyone, yes. Perfect. So what we'll do now, we will go on to rule 3, which is setting the pending trade. Now, once you've got your area of interest, so for example, this example here, we have a lower high within the market, which lined up with the round number. Okay. So in regards to entry, guys, we will always enter with a 5 pip buffer on the round number. So let's say, for example, you are looking to go short on pound US dollar, and let's say the high is at 1.3903. We would then enter the trade at 1.3895, simply because the round number is 1.3900. Yeah. And what you would do, you would add a 5 pip buffer just to make sure that we are tagged into the trade. So does everybody understand the reasoning behind a 5 pip buffer and how you would base a 5 pip buffer on a price of 1.3903? It's not a case of knocking 5 pips off this number here. It's a case of knocking 5 pips off the whole round number. Okay, so I've got a lot of yeses here. That's perfect. Great. So if, for example, though, your wick was at 1.3892, so your round number is at 1.3900, but your wick is at 1.3892. So it's actually 8 pips below the round number. So that means the first confluence that price is going to be hitting is the wick, not the round number. So guys, what do you think would be your entry price? And I just want to say there is no buffer on the wick. What price would you enter at if you was looking for a sell and your wick was at 1.3892? Where do you think your entry price would be, guys? So Darius has said the same, Chris has said the same, Jay has said the same. Perfect. So the only time you would put a buffer on a trade is when there is a round number as your first confluence. And there's a whole slide on the next slide regarding that, so we'll go over that. But yeah, guys, stop loss. There is a fixed stop loss of 40 pips on every single pair besides Euro New Zealand and Pound New Zealand. So please make note of that. If you trade Euro New Zealand and Pound New Zealand, our stop loss will be 50 pips, just because a pip on GN looks like, well, it's nothing. So Darius has said, yep, I don't think people follow. So there was actually only 3 replies in terms of entering regarding the wick and the round number. So guys, does anybody have any queries behind what I've just said? And please, guys, if you don't understand it, just say no, and I will go over it again. Like, there's no need to. So Taco said no, thank you. So James said all good. So no, can you show the next slide? Yeah, perfect, Dale. So there's the next slide. Tabish, what about news? We'll get onto that later on. This is simply just what we are looking for in terms of entering a trade. So for example, guys, this example here, there is Euro CAD. The lower high within the market is at 1.5105. So what is your round number? 1.5100. You're adding a 5 pip buffer to that entry. Okay, so you're entering at 1.50 0.95. And the next slide, guys, I'm hoping will clear this up for you. So this is the entry information, and I'm hoping these two lines here are going to be the thing which changes it for you. So we will always put a buffer on the round number for entry. The only time we will not put a buffer on a trade is if the high or low is before that buffer level. So you can see which confluences hit first. So let's say price is up here where my mouse is. What you can do is draw a horizontal line on your round number and a different horizontal line on the low which you are interested in regarding the retest. Okay? So you're saying out of these two here, the black line represents the round number. The green line represents the low. So guys, what I want you to do in the chat is answer this question for me. If this round number, aka the black line, is the first place price is going to hit before the wick, are you going to put a buffer on the trade, or are you going to just enter on the wick? What do you think, guys? So Tobias, let's put buffer, Darius buffer, Dale on green. So for example, Dale, if we're looking at that, if your black line is the first place price is going to hit, why do you think you'd enter on the green line? Because what we don't want to happen, we need to assume that price is going to react. We need to assume that price is going to react on the first confluence it hits. So the first confluence price is going to hit in this example is the round number, because the round number is at 85.5. The wick of the low is at 85.423. Well, 423 is 7.7 pips after the round number. Does that make sense? Yep, so I got it. You would have to pass on the whole number. Perfect. So because of this, when you get first started on this, guys, what I'd advise doing, draw one colored line on the low or the high, and also then draw a line on the round number, and whichever line comes first, that is when you would do that. So yeah, so Lars, you can even color code it this way. So if the green line is the first thing to be hit, and yeah, in fact, guys, this is what we'll do with the strategy. You want to mark your previous low or high with a green line, okay? You want to mark your round number with a black line, okay? Easy as that. If your black line is going to be hit first, you will require a 5 pip buffer. So for example, on this trade here is at 85.55. If you're looking to buy this market, what is a 5 pip buffer on this trade? Well, 5 pip buffer onto 85.50 is 85.55. Okay, easy maths. You're adding 5 to the round number. If you're selling, obviously you're going to minus it, just because that's how it works. So yeah, guys, what I'd advise doing, on the low, mark a green line. On the round number, draw a black line. Okay? And I've got another example here, guys, for you to look at. So in the chat, guys, let's look at this. Which line is going to be hit first by price, assuming that this is the trade? So what is your entry price, guys? So because you've got a green line, everybody is correct in terms of the green line. If we are entering on the green line, that means that that green line is a wick and it's not the round number. If the wick happens before the round number, are you guys putting a buffer on the trade, or are you just entering on the green line? Please enter now, answer now in the chat. Perfect. No buffer at all, because you're assuming this price here is before the price that would that you would have if you'd have put a 5 pip buffer on the round number. So for example here, like as Darius has quite rightly said, the only time you will have a buffer on a trade is if you have a round number first. If your wick is going to be hit before the round number, you will enter, obviously, on that. So Tabish, do we take into account spreads? I would say no. You're on the daily time frame at this point, so I would not worry about spreads. We are not on the 1 or 5 minute.
I guarantee Tabish, you will still miss by like single figure pips, like low single figure pips or spread differences.
Yeah.
You know you're going to miss an absolute banger of a trade.
Like Tabish, in all fairness, if you want to put a buffer, so let's say, for example, let's just say this is GU, okay? The spread on GU is half a pip. If you really want to add half a pip, or well, take away half a pip in this example, by all means do it.
That'd be such a kick in the shins, wouldn't it?
It's not really going to affect your risk to reward. It's going to be by a decimal point, the change of your risk to reward. So here, guys, what have we identified? We have identified that we are looking for the daily highs and lows that are yet to be tested on within 10 pips of a round number. Does everybody understand how you are going to identify your daily levels when you first come to the chart? And please answer in the group. If the answer is no, please, please, please let me know. Because if you don't, I've not explained it as clear as I should have, and I'll briefly go over it again. Okay? So we've got people answering yes in the group. Is there anybody on this call that does not understand what you are looking for when you approach the daily chart? So Darius, yes, this is $1 million course. Don't be afraid to ask questions. Exactly, guys. As Tom mentioned, we are not going to be in the communities 24/7 answering every single question. This is the point where you've paid for this webinar. If you don't understand something, this is the time to ask. So I'm assuming based on everybody in the chat that this is understood. So I'm just bad with maths, so we'll have to get used to the levels and add in a subtraction. But yeah, Chris, I'll be completely honest with you. There's a few people because psychological numbers, guys, and numbers, it's hard. So like Taco there, only count 4 decimals, right? Exactly. So let me just quickly do this. And this is the best way, guys, that I can explain it.
And there's zero shame in that, Chris. It took me a while to understand this, not because of how it was explained or the strategy, just because I'm an idiot when trying to work buffers out. That was it.
Exactly. So what I would say is when you come to TradingView, and this is the way I would do it, guys. When you come to TradingView, you have your prices here, right? If you look, there's a small number at the end of the price. That small number is the decimal point. So you are completely ignoring that last number. The only thing you are interested in is the last 2 numbers before the small one. Okay? Does everybody get that? So if you come to your trading view, all you want to do is look at this number here, completely ignore this decimal point here. So like basically look where I'm covering it. So you look at this and just go, right, instead of going, this price is 81.330 or 332 now, I'm covering it and I'm saying the price is 81.32. So I need that to be at 50 or 81 or 82 for it to be a round number. Does everybody understand now how to use TradingView to identify what a round number is? So Taco, I need TradingView. So Sky, super helpful, perfect. So yeah, guys, if you come to your TradingView, hopefully all you need to do, cover this last number, and whatever the last 2 digits are before here, that is the number you're interested in. If that is 40 and above or 60 and below, it's within 10 pips of 50. And if it's at 90 and above, or obviously 10 and below, then you obviously are within 10 pips as well. So does everybody understand that in the group? Please say yes or no, if that makes sense. Perfect. So there's a few more yeses now. Daniel has said you can use the date and price range tool if you need visual age. Thank you for that, guys. So that's something to bear in mind. Maybe look into it if you are struggling with the round numbers. Darius, so last three numbers, drop the last number. Exactly. And it's not even the last three numbers, Darius. It's literally just the last two. So, well, yeah, sorry. The last three numbers here, get rid of the last one. And the easiest way to do it, guys, there are numbers here, and there is a small one at the end. Cover the small number and just say, right, I know that's 82. I know this number is 70. I know this is 85, 44, 85. And like, I know someone asked, what about yen pairs? All would do. Let's come to pound yen. I'm covering the last number. It's at 69. Okay. So I know that 69 is not within 10 pips of 00 or 50. Okay. So hopefully people, hopefully people get that. As mentioned, what we are going to be doing is I will drop a spreadsheet into the community with every pair and the round number.
I imagine you're a fucking nightmare to play blackjack with.
So yeah,
brain man over here.
So yeah, RT just dismissed the tiny number on TradingView. I know Taco said you need to get TradingView. It's free. Just type in TradingView on Google and you can access it for free. So it doesn't need to be that. To be honest, there has to be an indicator. Most likely there is an indicator. I've only found one which does 2 lines below and 2 lines above. But again, guys, just literally cover the last small number at the end and look at that number, 86. It's not tricky. So that's perfect. Hopefully you can understand that. So now what we are going to go over, guys, is the take profit targets. And after this, guys, I will go on to TradingView. I will chart up some live trades just so you can understand the process that I would go through. So we know that the highs and the lows we trade are all based around the daily time frame, okay? So at this point, this is where the 4-hour comes into play. So all we are doing is looking at the daily in terms of entry areas of interest. And all we are then doing is targeting the 4-hour structure based on the highs and lows. So it's pretty simple, guys. We all understand market structure. We know what a previous high is. We know what a previous low is. Easy as that. So when we are buying, we are just going to target the retest of the previous low on the 4-hour. So I'm going to show some examples, but if you can imagine prices in a downtrend on the 4-hour, if we buy, for example, where my mouse is, we are expecting that it may retest the previous low on the 4-hour and continue in that trend. So that is what we are going to use as the take profit. And then this is why you need to keep on top of your charts. So for this strategy, I would say you need to check the chart every 4 hours. So every 4-hour candle close, just to keep on top of the charts. So it's not like you need to check the chart every 5 minutes. It's not like the free Confluence where you're checking the chart every 15. It is simply every 4-hour, you are looking at the chart just to see if a new high or low is made. And this is what I'm going to show you in this next example. So you can see here, example number 1, top left. This is Euro CAD. There's a daily lower high at 1.5100. Okay. That is, so now what we are going to do is enter, and I've drawn the number wrong here. If price is at 1.51, we are going to enter at 1.50, and that's meant to be a 9, so 9.5. And in fact, what I can do, I can just edit this card while I'm on it. Easy as that. So let's go back here. Here we go. Perfect. So now EuroCAD, your daily lower high is at 1.51 here. So it's an area of interest. Because the round number is the first confluence, we are going to enter at 1.5095. So we're assuming, and this is the biggest thing, guys, you need to assume that this trade is going to trigger within the next 5 minutes. I don't care if the trade is 2,000 pips away. Your take profit is based on the previous high or low based on what you are doing. So you can see here, at the point that the pending was set here in number 1, the previous high on the 4 hour was where my purple zone is. Therefore, that is where my TP is. And that is my TP until new structure is made. You can see, yes, there's a high over here to the left, but we are looking at the most recent. If you are familiar with the free confluence and you are in the community, you should be able to understand what a previous high and what a previous low is. Okay? So you're assuming that price is going to retest this previous high. Now, if we look at this picture 3, what do we see? We see now that a new high has been made within the market on the 4 hour. So now what we need to do is amend the take profit to be in line. And what we're going to use, guys, we are going to use the wick. So the first point of this high. We're not going to target the body. We are going to target the wick because, like Tom mentioned in his call, a wick is structure on the lower time frames. So now our TP is amended to the wick of this high. And if we look to the left here, you can see price came up, tapped as in sniper entry. So again, this goes back to, let's say, for example, we had a lot of banks long on Euro CAD and their target, because you see, guys, over here to the left, there is no structure to retest besides this next point here. So we see that price triggers us in, pushes down and hits the wick of the TP. And this here, I think it was a 4.5% win. Okay. Does everybody understand the concept that I've just gone over? Please say no if you don't. But does everybody understand how you're going to look at the 4 hour time frame and amend your take profit every time new structure is made? So I've got a lot of yeses. That is perfect. So that is the only thing that we need to keep on top of, guys. Every time you check the chart on the 4 hour, all you are looking at is a previous high being made. If I'm selling, obviously, if you're buying, you're going to be looking at a low, which I'm about to go over in this next example. Okay, so let's look at a TP example from a CAD yen trade I took last week. The previous low was at 85.423, okay, on here. So the entry, I'm just saying, Jordy, so you keep moving it until you get tagged into the trade. Exactly, perfect. So as mentioned here, you are just going to assume, even though price right here is like 300 pips, oh no, sorry, like 200 pips away from this level, you are assuming that the next candle is, what if this triggers in the next candle? If this next candle triggers, where is the 4 hour previous high? It's here. Okay. So every 4 hours, you check the chart just to see if any new structure has been made on the way for your take profit. So Jordy, that's doable. Perfect. All you need to do, mark your daily levels, which can be done probably at the start of the week. And then all you need to do every 4 hours, check the chart. Okay. So now let's go into the next example. This is a buy example, as mentioned. Tabish, is there a minimum risk to reward needed? I'm going to get onto that. So previous low here on the daily was there. If I look where my line was, it was actually at 85.406. So you see, guys, that is within 9.4 pips of a round number. So because of that, 9.4 is less than 10. So this trade is then valid. Okay. So because our low is 85.423, where are we going to set the pending? Well, we're going to set the pending at 85.55 because if price comes down here, what is the first confluence price is going to hit? Is the first confluence going to be the round number, or is the first confluence going to be the wick? Well, if the round number is at 50 and the wick is at 40, that means that the round number is first. So because the round number is first, we are just going to add 5 pips and enter at 85.55. So you can set that pending now and just say, right, where is the most recent 4-hour low? So we check the 4-hour and target the previous low wick, which was there. And because we're buying, obviously. So we're just targeting the recent low in the market, assuming that this trend down would continue. We need to assume, and I've just mentioned this in a couple of last slides, you need to assume that price is going to trigger within the next 5 minutes. If price triggers within the next 5 minutes, where is your TP going to be? It's going to obviously be on the 4-hour low. And Ben just said, knackered lads off to bed. Cheers, boys. Thank you, Ben.
Thanks, Ben.
Am I boring you that much, Ben?
Could have just said bye.
So what we're going to do, we're going to target, obviously, the 4-hour low, and we're going to target the wait. Ben, wank first, then Ben.
Jesus.
Fucking hell, Ben.
This cow is nice.
So, yeah, as we set the pending, guys, we're just going to assume it's retesting, obviously, the 4-hour low and the 4-hour wick. So what we're going to do, we're assuming that price is triggering within the next 5 minutes. If price triggers in the next 5 minutes, then we're assuming it's just going to retest this previous low. Okay? So now looking at the final picture on the right, no new lows were made once we set the pending. So actually then we got triggered into the trade and we achieved a take profit of 3.8 to 1. Does everybody on this call understand what I have just been through? Tabish, yes. Chris, yes. Jordy, yes. Daniel, yes. Dale, yes. James, yes. Perfect. That's a lot of yeses. Perfect. So that then would be your trade. Now, because the strategy is rule-based, what are some reasons, guys, that we may not take a trade? So, reasons not to take a trade. Like the free confluence strategy, guys, we need to identify reasons why you should avoid a trade. And lucky for us, there's only actually 2 reasons for this. So the first reason is negative risk to reward. So if you found a daily entry, but as price starts coming towards your daily level, that a 4-hour low is made within 1-to-1, so you have a negative risk to reward, you will not be taking that trade. Same for Tom's strategy as well. If you have a negative risk to reward, it's not worth the risk because you're not winning more than you're risking. A 1-to-1 is okay, but more often than not, if it's negative, please just avoid the trade. Simple as that. And the second thing, and I've just seen your message, Dale, in terms of news, I'll get onto that. If a trade misses pending by 5 pips, we will cancel the trade. So, for example, if a trade misses by 9 pips, you will still keep the pending as long as the most recent high or low ends up being 1-to-1. So therefore, we would keep the horizontal line on the trade, but obviously the minute it misses by 9 pips, you will have a 4-hour low within 9 pips. So then ideally what we want to see is price then push up or down away from the level, create some new structure, and then the next time price revisits that level, we will be happy to take the trade if we have over 1-to-1. Does everybody on the call understand why that is valid? So does everyone understand how the horizontal line stays the trade? Yep. So to be, if a trade misses by 5 pips. So let's say you have a pending order on GU at, let's say, 141.05. If price comes down and goes to 141.08 and then pushes up and hits, for example, your take profit, that trade missed by 3 pips. So that is a very, very close call. So for that reason, we would cancel the trade. If a trade comes within, let's say, 10 pips of the level and pushes away, we will not class that as a missed trade in terms of cancelling it altogether. We will just look at the recent structure and say, now because it's just missed, there's now a new 4-hour low. Yeah, all in regards to entry. So if price misses by 10 pips, then obviously, and then bounces, that's a new 4-hour low. But then if price decides to go in an uptrend for, I don't know, 50 pips or whatever, and then creates new structure coming back down, the second retest could give you an entry over 1-to-1 because all the orders on that level have yet to be filled. Does that make sense? Perfect. Thank you. So they're the only two reasons, guys, we are not taking a trade. The first reason is negative risk to reward. Easy as that, because that's just common sense, guys. Please don't be stupid. Second thing, yeah, so Darius, so you cancel the trade, but the level is still valid if more 4-hour structures made, and the retest will give you over 1-to-1. So if a trade misses by 5 pips, guys, we're cancelling it. If it misses by, for example, 8, 9, 10, you can still keep it, just only if you have over a 1-to-1 risk to reward. So let's look at an example of a cancelled trade. So this here, you see, this was a low within the market, which pushed up. So you see here, low, a high was made, pullback. This is now a low within the market. And then it pushed up and created a new high. If you look where this line is drawn, it's at 0.92959. Okay? So that means that is 4.1 pips off the round number. So I would have my entry at 0.9305, because remember, we're disregarding the last number. So if I cover this number here, it's 0.9295. So because the round number is going to be hit first, I'm putting the buffer on the round number. I hope that makes sense. So then what we're doing, because we've got this trade set here, I'm happy to set the pending, but let's look at the 4-hour and see what we're looking at. Well, if I go into the 4-hour, I would say here that price has created a new low, pushed up to create a high, pulled back, and I've just done this to highlight the risk to reward, but it has kind of covered this area here. You see, if you are targeting the most recent point of structure, you are targeting here. Does everybody understand why this here is the most recent structure compared to this here? So does everyone in the chat understand why you target there? Yep. Perfect. Great. So because of that, we're assuming that once this candle closes, let's say here, we're assuming that in the next candle, price is going to trigger, because that's the way we are looking at this. Then, because we've got a 40 pip stop loss, we've only got a 30 pip target. Therefore, we are closing this pending. We are not taking the trade because we are risking, let's say, 1,000 to make 750. The numbers don't stack up. Okay? Let's look at an example of a mistrade. So this was a higher low, and the higher low you can see was at 0.7096, and let's ignore the last number. So it's 4 pips from the round number. Because we are buying, what is price going to hit first? It's going to hit 0.7100. So we add 5 pips to that number for the buffer, and this is the trade here. Now let's go into the 4-hour and see what happened. You can see price missed pending by literally a pip and pushed up and would have smashed our TP. The reason TP was here, guys, is just because this is the most recent structure you could work with, and there is a wick there. Yeah? So that is the reason, but because it missed, this order was not filled. And because it missed within 5 pips, the pending is cancelled. Easy as that. So within 5 pips, the level is retested. So what do you mean by that, Taco? Sorry. I just want to make sure that we are all understood in terms of this. So we abandon the level. So this here has been retested because it's missed our entry by 1 pip. So this trade, because it missed within 5 pips, this level is now invalid. And even if price comes up here, makes some new structure and comes back down, we are not taking the trade. We want to avoid it at all costs. Okay? So now let's look for some extended TP targets. So because we are on the daily time frame, and Carla, I know you like to swing trade and you like your extended targets, so I'm hoping that you kind of understand the reasoning behind this. So that's the reason this strategy is great, guys, because we can have extended targets and make use of the daily trend. When the daily is in a trend, it is going to take a lot to see a reversal within the market. Okay, so there's going to be big news, anything like that. It's going to take a lot to break these daily levels, because usually when a pair is trending on the daily, it's going to keep going until something happens. So if you see that the daily is a nice and clear trend, we can look to hold the trade and have more of a swing trader approach. So in terms of your take profit level, I would advise, if you are in the direction of the trend, I would advise to close 80% of your position, so a bulk of it, at TP, which was the 4-hour retest, which would be our normal take profit area. Then what I would do is leave the remaining 20%. So let's say you get in a trade for, I don't know, easy maths, 10 lots. Once price reaches your 4-hour retest high or low, you are going to close 80% of the position. So you're going to close 8 lots, and you are going to then keep 20%, so 2 lots, running with a stop loss at break even. So Dale, would you ever use a trailing stop and let it run? Personally not. You can though, because we've seen trades just continue to go. So if you're comfortable doing that, then yes, by all means do it. Just make sure that we go break even at 40 pips. However, I would personally just take 80% off, secure that profit, and then hold 20%. Regarding this, you can do 90-10, you can do 70-30. Whatever split you're comfortable with, we can work with that. So it's completely up to you. There's no set rule. So Tabish break even at 1-to-1, yeah, perfect. So you've got a 40 pip stop loss. You are going break even at 40 pips. There are going to be some trades, guys, which go 45 pips and then stop you out, and you'll think, well, should I do 50? I've back tested this, and a 40 pip stop loss is optimal for this strategy. Okay. And this is the good thing, guys. FTMO have now released, and as well, Funding Talent do this. They now have a swing account that is for the funded accounts. And Dale, yeah, like Darius has said, whatever you want to do, mate, if you want to backtest and leave 50% open and close 50%, by all means do it. My personal approach is 80% and leave a 20% runner, just because that's what I'm comfortable with. There's no holy grail or anything like that. It's just what it is. So yeah, with the FTMO swing accounts, you can hold trades over the weekend. You can now trade news, but we're not really bothered about news. I'll go over that in a minute. But let's look for some examples, guys. So we see that the daily is in a nice uptrend here on NZD US dollar. You can see, guys, that the market is clearly trending up. And we've identified a previous higher low within the market that is yet to be retested. Okay, so that daily low is at 0.6505. So because of that, that's landed on the buffer anyway. So we are happy to take this trade. What we will do, and what I wanted to identify here, guys, is that this is the 4-hour low. This purple box is the 4-hour low, wick to body, like the free confluence. So taking this trade here, guys, we could achieve a 1-to-1 risk to reward based on the 4-hour low. And that is just targeting the wick here. So because of that, this trade is okay to take. We're happy taking a 1-to-1 trade. But you can see the daily is in a nice uptrend. So because of that, we are going to now look at closing 80% at this here on the retest of the 4-hour low, and leave a 20% runner with stop loss at break even. And what we will do, guys, we are going to trail the stops on the daily time frame. So once you've entered on the 4-hour, and you've got your stop loss at break even and you've closed 80%, all you care about then is the daily. You can see you're entered here. There were a nice reaction. Price pushed up here, created a higher low and pushed up again. You could then put your stop loss, in this term it's TP, and then you can see price did actually come back and take you out. So from what was a one-to-one trade, because you've trailed your stop loss with the daily trend, this then became, I think it was a 2.25. So you've doubled your risk to reward just from holding the trade. Some people may see this here and say, you know what, that's a higher low. I'm going to move it there. And then you probably got maybe like a 3.5. It's not always going to be a 20-to-1 trade. Like, it's not. But having a 2-to-1 instead of a 1-to-1, these things are going to add up. And for example, I'm currently still in, and what I'll do, I'm going to get up on my phone, my account, and show you, well, not show you, but speak out what I'm on about here. So for example, there's currently a trade in Euro Australian dollar. My stop loss is at 111 pips in profit, and the trade is running 285.
Screen grab it, drop it in Telegram, and you'll be able to put it on.
Is that group made now?
Yeah.
Perfect.
Everyone's added to it as well.
So what I'm going to do, guys, I'm going to show you these, and I'm also in a New Zealand dollar trade like this, and I'm going to show you, these are two trades that I am currently in. So everybody that has been added to, can you add me to it, mate, please? I'm not even in the group. What I'll do, guys, I will post the 2 screenshots into the community on Telegram. Perfect. So we'll join group. So please look at these 2 examples here in Telegram. And once you've seen them, guys, please just acknowledge in the group chat that you have seen them. So you can see I'm trailing my stop loss below these lower highs. Okay. Darius says not in it. Darius, you've already seen it. Lars, not in it. Oh, that's not good. What we'll do is, because obviously we didn't have it on the spreadsheet, we've had it once we're on the call. But basically, guys, you're going to look at it and see. But yeah, you can see, guys, that I entered a trade on NZD USD. It was at the 0.92 level because that was where the wick was. And now I'm trailing my stop loss above the lower highs within the market. And there's a Euro Australian dollar, and my stop loss is currently at 111 pips. And that is obviously above the higher low as well. So I hope that works for you. So can everybody see now how you can use the daily to trail your stop? Does everybody understand that? Perfect. So we now understand how to trail our stop loss. Sometimes, guys, there's going to be trades which go thousands of pips, because if you can catch at the start of the move, then what you're doing, you are just sitting and trailing your stop loss. There are going to be some trades, guys, you might be in a trade for a year. Like, it may well be that you're in a trade for the year. I was going through some material with Darius and Jay yesterday, just to basically do a dummy run of this, just to make sure that I had everything right. And any questions they asked, I made sure to incorporate them in this, just because if they ask the questions, potentially you guys would as well. So we backtested, we did a live backtest session. We set a trade in 2018, and it invalidated actually about 4 hours due to the high on the 4 hour. It invalidated just before the trade triggered. So you'd set a trade 3 years ago, and it then triggered. So this is a very passive way to trade. It's not always going to be 3 years, guys. The 2 trades I've just sent into there were pretty much triggered a week after they were set, so I wouldn't worry about that. But yeah, that's just what it is. So now this is the live trade, guys, that I want to show you. So this is another live trade on Euro CAD. So if we're looking at this trade, this was the lower high within the market. The green line you can see was at 1.51022. So because of that, the round number was at 1.5100, meaning 2.2 pips. So the round number was hit first. Because the round number was hit first, we are entering on a buffer on the round number. You can see we've been triggered in here. The 4-hour take profit there was 4.5%, and that was hit this week. But you can see, assuming the price did this, I could trail my stop loss on the daily below these lower highs. Does everybody see why you could do that? And does everybody understand what you would do in this case? So it's tricky because at this point you're still in the trade. The trade is all the way down here. Your stop loss is still at break even. You haven't secured anything at the minute because
are you in this one?
Yeah. And you can see with this, price is making the highs and the lows within the market, but a new lower high has not been made since this trade happened. So your stop loss is at break even and you have no structure on the daily to trail your stop on. So until the point a lower high is made, your stop loss is at break even. There's a very good chance, well, not very good at all because it's the daily, there's a chance that this trade comes back up here and takes you out at break even. But from what I've tested, trailing your stop loss on the 4-hour, it doesn't work. So always trail your stop loss based on the daily structure. Okay? So that is that one. So let's do a recap of the strategy, guys. First step, we're identifying untested highs and lows within the market. We're checking to see if a high or low is within 10 pips of a round number. If it is, we will keep that level of interest. So we will set a pending, assuming that price will trigger within the next candle, no matter how far it is away. If the round number is your first confluence, you will add a 5-pip buffer. But if your wick is the first confluence, then you can enter on the wick. 40 pip stop loss for all pairs, 50 pip stop loss for GN and EN. Set take profit based on the retest of the wick on the previous high or low based on the 4-hour. If you are in the direction of the daily trend, optionally, you can close 80% of your lot size at the 4-hour TP and leave a 20% runner, assuming the daily trend will continue. It could well be, guys, that you want to do 50-50, 60-40, whatever you want to do, it's able to be done. And again, move stop loss break even when gaining 40 pips. Realistically, guys, if my trade is running 38 pips, I'm going break even because it's just silly not to, in my opinion. And then finally, avoiding trades. If you can't get a one-to-one risk to reward based on the recent 4-hour high or low, do not take the trade because it's not worth it. If your pending misses within 5 pips, cancel the trade. But if it misses for example, 8, the trade is still valid in the future, just if the recent high or low is over a one-to-one risk to reward. And it's as simple as that. So I know a few people, Carla, the first 3 rules are based on the daily time frame. The only reason you use the 4-hour time frame is simply for your take profit.